Hello and welcome to another update today. Today is 30th of November. So you're looking at the daily chart of SPY. SPY had a massive day. It was up 3.1% after the Fed Chairman Powell suggested that Federal Reserve would be slowing down the rate at which it increases the interest rate. He said a lot of things which I think the market reacted positively. Market was previously concerned that Federal Reserve would increase interest rate to a level that would lead to a massive, fairly large recession. But Fed Chairman Powell clearly indicated that that's not his intention. He wants to increase interest rate to a level without causing a serious disruption to the economy. He doesn't want to throw hundreds and thousands of people out of job. Yes, he wants to slow down the labor market because there is an imbalance, but he doesn't want to do anything drastic which is going to basically cause hundreds and thousands of people to lose their job. And I think as soon as the market heard that, it was off to the races. So let's just look at the technical picture and see what do we see. So you can see that there's a big bullish candle. It bounced off the daily 20 EMA, the green line right here, and it rose so much that it didn't even pause at the daily 200-day moving average, which is this black line. So it took out that. The next area is this downtrend line. So let's just have a look at this down. I'm just going to get rid of the moving average. So this is the downtrend line. So you can see that it acted as resistance here. Now we're right there. Now my view is that after what Chairman Powell said, the odds are now more favorable that SPY is going to break through this downtrend. So that's basically what the odds. But I think we should still wait for data that would be coming out in the next couple of days to support what Chairman Powell said. First up would be the PCE, which is the inflationary measures that Federal Reserve watches. It's going to come out tomorrow. I don't think that there's going to be any surprise there, because the CPI was below market expectation, meaning it was friendly to the market. The producer's price inflation was also favorable to the market. So I don't think PCE is going to show anything other than the fact that the inflation is moderating. But I think that the report that could really challenge would be Friday's unemployment report. Because if the unemployment report comes in stronger than the market is expecting, then some of the euphoria or enthusiasm could reverse. Because the Federal Reserve Chairman clearly said that he still thinks that the labor market is tight, and he wants to see the labor market come in balance. So I think Friday's report is going to be quite important. If the report comes in friendly to the market, then I think this downtrend line is going to be broken above. So this would be the key resistance right here. If it breaks through this level, then I see this level opens up, which is around 429, 430 level on SPY. You can see the momentum indicators are moving higher. You can see that MACD is just crossing above the zero line. I'm using a two-day bar, a two-day chart, and you can see that RSI is steadily moving higher. Now today was a month end, so let's have a look at the month end picture. I want to show something, so I'm just going to bring back the moving averages. So you can see that over the last several months, SPY was trading between the monthly 20 EMA, which is the green line, and the monthly 50, which is the yellow line. And the monthly 20 acted as a resistance. Today, it closed above the monthly 20. The monthly 20 is around 402. Today, SPY closed at 407.68. So it printed a close above this. This I think is a positive development. Also notice the monthly candle. It closed significantly higher than the previous October's monthly candle. So this is a bullish candle with a wick at the bottom. So this is quite positive from a monthly point of view. You can see that the monthly RSI started to move higher. It has gone above the 50 level. So that's also a positive indication. The other thing you'll notice is that the MACD, monthly MACD, is coming down, but it's now beginning to curl. The backline is beginning to curl. Now, what we need to do is see a cross like this. If we see a cross and we see MACD start to move higher, that would suggest that we could have, sustained rally. But we're not there yet. It might take a few more months for MACD to actually cross, but we can start to see the monthly picture beginning to improve. Certainly a close above the monthly 20 is positive, and the fact that RSI it was below the monthly 50. Every time RSI remains above the monthly 50, good things happen to price. So right now it closed the month above 50, closed at 52.48. So this is definitely positive from a long-term perspective. Obviously, incoming data would substantiate these moves. So we've got the unemployment report on Friday, and then next week we have the CPI report. So that's also going to be important. So this is quite positive. So coming back to the daily, so definitely we want to see a test of this resistance, but I think this resistance could be at risk, especially if Friday's job market is friendly to the market. Let's look at QQQ on a daily basis. So again, it was flirting with the daily 20 and 50 EMA, but made a strong move after Fed Chairman Powell spoke, and then it closed just below this previous high, which is around 293.26. I mean, it closed fractionally, like 10 cents above. So this is also now looking positive. You can see the momentum indicators are positive. MACD is moving higher. It's above the zero line. RSI bounced up the 50 level. So you can see that recent correction brought it to the 50 level. It bounced. So that's looking positive. If I look at the monthly chart quickly, you can see the monthly printed a bullish candle. The October monthly candle was a indecision candle, you can see, and this month it made a decision as to the direction of its next move, and it's showing that it wants to go higher. I think the next challenge would be to overcome the monthly 20 EMA, which is this green line, that's currently at 311.37. So we need to see a monthly close above that. If so, then what's going to happen is that it will have basically taken out another key resistance. You can see MACD has fallen and it's now coming to the zero line. Now, if it's going to turn, this is where I would expect it to turn. RSI hasn't moved back above 50, but it's on the up. So it looks like it still needs more work. The technical picture for QQQ is not as bullish as SPY, but it's improving. You can see the bullish candle this month. If we look at Russell 2000 just to see, IWM just to see, so this is the monthly IWM. You can see that it closed just below the monthly 20, but the candle is bullish. You see long wick. Look at the MACD, it has pulled back to the zero line, and if it's going to cross and start to move higher, this is where it needs to happen. You can see it has done so here, it has done so here, and it has done so right here. So this is now, the MACD has now reached a level from where it can cross. You can see RSI is just moved up to the 50 level. It hasn't closed, so we don't have a monthly close above 50. It closed at 49.31, but you can see that it's forming a double bottom pattern at right here. So this is a important level. So if it can get back above the monthly 50 and we can see the gap narrowing and cross, I think it will start to show bullish technical picture. So the technical picture is beginning to improve on a monthly basis. So let's have a quick look at the daily. So you can see that it was beginning to form a lower high, so it was a bit concerning, but managed to bounce strongly off the daily 20. It closed above the 200-day moving average. So that's also looking positive. The daily momentum indicators are positive. MACD is above the zero line. RSI is above, the 50 level. So that's looking quite positive as well. Now let's have a look at the dollar, just to see what the reaction was. Dollar was down 7.75%. If you look at the monthly chart of dollar, I'm just going to get rid of some of these things so we can have a look at. You see in October, the DXY had a indecision candle. It was a doji candle right here. And this month in November, it made a decision on its next move. And the next move is to the downside because it closed below the low of the previous candle. So on a monthly candle, on a monthly basis, this is looking like it wants to go lower. If we look at the weekly chart, you can see on the weekly basis, MACD is moving lower, RSI is moving lower, and RSI is now below the 50 level, and it's seeing some acceptance below the 50 level. So the momentum is on the downside for DXY. So if we look at on a daily basis, you can see that the two moving averages, daily 20 and 50, started to move lower. It's finding price acceptance below these moving averages. These moving averages are now going to act as a dynamic resistance. You can see this was a resistance. On the way up, you can see that these moving averages acted as support right here, right here, right here. So now these moving averages are going to act as resistance. You can see the momentum indicators are weak. On a daily basis also, MACD is well below the zero line, RSI below the 50 level. So that's looking weak to me. If I look at the yields, just to see what's happening. So let's look at the Fed Fund futures. So these are the Fed Funds futures. This is the March Fed Fund futures. It fell 4 basis points to close at 4.76. So what the market is basically saying, by March of 2023, market expects Federal Reserve to be at 475. Previously, market was expecting Federal Reserve to increase interest rate to 5% by March of 2023. But now the market is expecting Federal Reserve to go up to 475 by March of 2023. If I look at the June, this is the April. The April is at 487. So April is also not pointing to 5%. April is more closer to 475 than 5%. If I go out to June, June lost 9 basis point at 4.92. So it's now beginning to also decrease, but it's still closer to 5%. So market is saying that by June, the Fed would be between 475 and 5%. If I go to September, this is where we saw the biggest decline today. It was down 12 basis point to close at 4.83. Even by September, the market is not expecting Fed to be at 5%. So I do not see any yields at 5%. They're now coming closer to 475. So this is a big shift in yields. In fact, if you look at the inversion, this is the inversion. The inversion fell 15 basis points. This is the inversion between 2 and 10. So that fell 15 basis points because Federal Reserve chairman said that while we may have a recession, but he's still thinking that it would be more mildish in nature, and that's why this spread narrowed a little bit. 10-year lost almost 12 basis points to close at 363. So you can see that it started to come down and looks like it may go lower, based on what I'm seeing. Let's look at VIX. I think this one got hammered today. I want to show you the monthly chart because the monthly chart closed. So let's get rid of this moving average. Look at the monthly chart. The monthly, it had a sequence of using closing prices. If I show you the line chart, you can see that it had a sequence of higher lows on a monthly basis. today that sequence has been broken on a monthly basis. So this is looking like the fear is coming out of the market. And this is a big this is quite big. You can see the monthly MACD is just about to cross right here to the downside. So if that happens, that would be quite big. You can see on a monthly basis RSI has closed below the 50 level. So this is now showing that it wants to go lower. If I look at some of the individual stocks, let's look at some of the sectors. I think these sectors will provide some clues. So this is XLK. This is the larger technology sector. You can see it bounced off the support area. It closed just above the previous high right here. So this one is showing that it wants to go higher. This would be the next area of resistance, 139. And being the largest sector in S&P 500, any further move to the upside is going to push S&P 500 higher. So that's a positive sign for S&P 500. XLY up next, discretionary. This was basically going nowhere until today. It was up almost 3.5%. Big green candle. We still need to see it get back above this zone right here, but it's moving in the right direction. This also is growth oriented. If it moves higher, it's going to put upward pressure on S&P 500 and SPY, which is that's good. XLF financial, it also, after early weakness in the morning, reversed and was up almost 1.75%. So it's also it looks like wants to go higher. So that should put upward pressure on S&P 500. XLV, massive move to the upside today. If you look at the weekly chart, you can see that it continues to move higher. So you can see MACD is now crossing above the zero line. This is looking quite bullish. So this should put upward pressure on S&P 500. XLC communication. So that also came to life today. And you can see that it's now closed above this previous swing high. So further move to the upside is going to put upward pressure on S&P 500. You can see MACD crossing above the zero line. The others, which are this is materials. This has also had a good day. So looks like it also wants to go higher. So that's positive for S&P 500. Industrials looking quite strong, and it's now gone above this previous high, so that bodes well for S&P 500. So even the sectors you can see are looking quite strong. Some of the underperforming sectors like technology and discretionary and communication, more growth oriented, they've come alive today, and that bodes well because previously it was the value sectors which were supporting S&P 500. Now looks like the growth sectors are also coming alive. So if that's the case, that bodes very well for S&P 500. If I look at some of the stock, I want to highlight Microsoft. You can see that it traded inside this range for a long time, and you can see, boom, big green candle, and it closed above this area of resistance. That's looking positive. Another one that's looking positive is Google. You can see basically very lackluster over the past couple of weeks. Today it closed above this area, so that's looking good. So overall, I would say that things have changed. At least the sentiment has changed because there was a lot of uncertainty. There was a lot of doubt that the Federal Reserve has been very aggressive. They're going to crash the economy. We're going to have like a 2008 style crash. I mean, we could still have that. I mean, I won't say that it won't happen, but after today, some of those concerns has been eased. And I think if the data on Friday supports, what Chairman Powell said, if the data comes in below expectation, I think this rally could continue for a little bit longer. So I'll leave it at that. Thank you very much for watching the video.